Okay, it looks like attending numbers have stabilized now, so we'll get started. So, thanks again for all of you for joining our Ocean and Air Freight Tracker Outlook webinar for Q4 2024. In today's session, we're really going to be looking ahead to 2025 and assessing how we think the market's likely to develop, what the supply and demand mix is likely to be, and trying to give you as much guidance as we possibly can on freight rate developments for the next year or so. And obviously, I think it's fair to say that the second half of 2024 has perhaps been a bit weaker than we initially would have anticipated, but we have seen, rates beginning to, pick up again, at the end of the year, even if demand has been a little softer. So as we go into 2025, the job will be to try and work out how that will play out for the next year or so. And when the demand recovery that was predicted for this point of 2024 is likely to really kick in, and to what extent that's likely to drive rate growth or maybe counterbalanced by other supply side issues, really. So today's session we'll have about a 30-minute presentation. We'll spend about 15 minutes on ocean freight, and then we'll move across to air freight. We'll take you through all the key dynamics and then move through our outlooks for 2025 and try and explain TI's expectations for next year. We will share the presentation, a recording of the presentation after the session for all of you. So, if you want to pass it on to other colleagues or anything, you're welcome to do so. And of course, for those of you that haven't yet downloaded the tracker reports, they're both out now for air and ocean freight this quarter. So we'll also be sending out links to download those if you haven't yet read them. But we'll try our best to summarize them here now. At the end of the session, we'll have our Q&A, so please feel free to answer any questions as they occur to you throughout the webinar. You can just use the Q&A app via Zoom to do that. And we'll also be introducing our polls to ask you what you think about freight rate development for the next quarter when we address our overall survey of a couple of thousand market participants on their expectations for rate growth. So we'll see how your views compare with that survey as well. So please be prepared to answer the poll through the session. And obviously, if there's any further data that you acquire from these reports and presentations today, please bear in mind that you can access all of those from TI. So just feel free to get in touch with us to ask about that if you are interested in accessing more of that kind of data in the future. Right, so I should introduce myself and the panelists here. So for those of you that don't know me, I'm Michael Clover. I'm TI's Head of Commercial Development, and I'll be your host today. But I'm also joined by my colleagues Nathan and Janan. Nathan is our data team leader and oversees a lot of the data analysis that you'll be looking at today. So welcome to you, Nathan. Thanks for joining us.
Hi, Michael. Hello, everyone.
And I'm also joined by Janan Hassan, who's one of our economic analysts here at TI and is responsible for a lot of the rate data and the high frequency data that we'll be looking at today and providing the analysis that drives those reports. So thanks, Janan, for joining us and sharing your insights with us today as well.
Thank you, Michael. Hello all.
Okay, so we'll move on to our first chart now, and this is our overview of overall rate development across the global market as an index. And Nathan is going to talk us through the trend we've seen and how rates have developed over the last quarter.
Thanks, Michael. So an interesting year and quarter for ocean freight rates. We're now actually approaching a year since we've had the situation in the Red Sea. So a year since Houthis in northern Yemen started attacking ships passing through the straits in the area. And what we've seen actually that as it's progressed throughout the year, global sea trade has actually continued to function with its new route around the Cape of Good Hope, which is becoming a semi-fixed feature in global shipping routes at the moment. The effect is a 50% increase in the journey time, especially if we're looking at those Far East Asia Pacific routes to European and Mediterranean routes. If we're looking at the actual data and the actual changes in the number, the head haul is what we see here as well as what's really affecting shippers and shippers across the world. That is now at 352.3 points And what that is, it's a quite considerable increase throughout the year, really. So it's up 117.6 points if we look at January 2024. But we can see that actually it's reached nowhere near the highs that we had in that kind of post-pandemic pandemic lockdown stage. So we've seen some high increases due to the disruption, but a period of recovering demand. But actually, we haven't seen it to be as disruptive as we expect. If we're looking at the wider story and what's led to this, obviously we've recognised the capacity side, recognised the longer journey times, the greater disruption. But really on the demand side, which we'll get into in a bit, we don't have huge pressure. So we've got some uncertainty that is alongside the capacity side, the uncertainty on the demand side, and the uncertainty around changing demand as we head into 2025 for multiple reasons has also produced some demand pressure, but consumption remains recovering, but still lower than historic levels. And then PMIs particularly are quite low. They're either in no growth or very low growth across the world if we're looking at production growth. So mainly affected by the supply side issues, the demand, which we'll go into soon. The rates remain elevated, and recently we have seen them falling. We can probably expect some more falls as the market seems to be adjusting well and adjusting to the new reality and the new routes. And we'll get into more on the demand and supply side.
Yes, thanks, Nathan. That's interesting. I mean, just say, of course, there is a lot of variation naturally on different routes. We'll try and pick up on a few of those during the session today. But if you want to read more about that in detail, then you can download the full tracker reports to look at those major lanes. So that's the overview of the rate situation. We can move on now to take a look at the demand situation expressed via these volume indexes as well. And you can see some different routes actually on here already. But Nathan's going to talk us through this one too.
Yeah, so a very mixed and interesting story really for ocean volumes in 2024, but largely it's a year of recovery as inflation pulled rates down end of 2022 into 2023 as we saw low volumes. Sorry, it pulled volumes down as we saw low volumes from lower consumption and then much lower production growth. And so if we're asking what does the data tell us? Well, global port volumes in Q3 2024 were up 8.3% versus 2023, and that reached 120.6 index points. And we saw a 4.1% rise quarter on quarter. So that's into Q3. So we're ending the year rather strongly, as we'd expect it for the peak period, but it is also it is around the expected increase for this time of year. If we're looking at we look at the regions and we look at how this growth is spread out, we see that North America saw the most notable recovery. So that's up 18.2% year on year, following a very weak end to 2022 and quite a weak 2023, but a strong recovery, especially as we look towards the end of 2024 for North America. That's then followed by Asia Pacific region, which saw a 5.8% increase in volumes. And then Europe saw just a 1.6% increase in volumes. So these are year-on-year figures. So we can see that Europe still struggling to find that growth. Consumer spending remains quite weak. We look at the most recent changes. North America really strong quarter on quarter with 9.8%, APAC 3%, but Europe is down 1.5%. So generally, we see consumer demand has recovered well following inflation, but it remains quite volatile, quite unpredictable. And really, we're seeing some key factors outside of just the consumer and the production growth. So that's we've got the uncertainty around tariffs and companies trying to potentially build stock as they head into the new year. And we might be seeing that a little bit more now. And also just adjusting for that disruption and the time. So strong end to the growth, a general recovery, and we head into 2025 with some strong growth, but a lot of uncertainty, and it remains a mixed bag. Europe's still quite weak.
Yes, thanks, Nathan. It's an interesting question about, obviously expecting the introduction of tariffs, but when might those come in and how will they affect volumes, over the quarters ahead, which we'll try to come onto a little bit when we get to our outlook slides as well. So that gives you a picture really of the demand side up to the present time, and we can also now move ahead, just look at some of the supply side issues and what's been going on capacity, helping to sort of govern pricing really in the ocean freight market. So complicated picture really, but Janan's going to try and shed some light on it for us.
So even though global capacity has increased by 5% this year, if we zoom in a little closer, it's been on a slight downwards trend recently. We observed capacity decline almost 1% quarter on quarter and month. The idle fleet is unusually low for this time of year, so it's clear that carriers are keeping things tight. The capacity in Q3 has hit a 2-year high compared to the exceptional conditions of 2022. Um, since then, things have shifted significantly, with capacity dropping 7.4%. Overall utilization is high, idling is low, and the added mileage from rerouting vessels around the Cape of Good Hope is driving up the workload per TEU, even though Trans-Pacific and intra-Asian routes are operating normally more or less. New vessel deliveries are expected to decline over the next year, but Q3 still saw major shipping lines ordering large new container vessels. So the question remains, are carriers overestimating future demand, or the industry is just playing the long game?
Yes, thanks, Janan. Okay, so that's a classic question really in the ocean freight market. And we'll come on to that a little bit again when we get to our outlook. But moving on to fuel price now as well. What's the situation here, Janan?
So fuel prices across the board have been on a decline. OPEC has once again revised its global demand oil growth forecast downwards, which was the fourth consecutive downwards adjustment. Projections for both Q4 of this year and the full year of 2025 have been reduced, with demand now expected to grow less than previous estimates. And this adjustment has contributed to a drop in bunker fuel costs across all regions, with prices falling 2% on month. Quarter on quarter, they dipped 1%, and year on year, similarly, they dipped by 1.1%. The results of the recent US elections are also adding to the uncertainty surrounding fuel prices as a whole, due to the potential foreign policy approaches under Trump further suppressing oil demand because of their hardline policies and enforcements on trade.
Hmm. Yes, all sorts of considerations there as well, around US oil production as well, I suppose. So again, an uncertain picture there. It remains to be seen what the new administration will really do on that, and indeed on the foreign policy issues. Now, we move on before we get to the actual outlook to our sentiment index here, which is basically our measure of the market's expectations for freight rates. So I'll explain the chart here and what we see. But whilst I'm doing that, I'm also going to open up our poll for you so that you can give your own view on what's going to happen to rates in the next quarter or so. So please feel free to answer that question, and we'll see your opinions on freight rate development for the basically first quarter of 2025. But yes, turning to this sentiment index, really, as I say, it's basically our measure of sentiment on rate development from you. I think there's a couple of thousand participants in this survey, so it's a good cross section of the market, we think. And overall for ocean freight, the general sentiment is that there's a majority, 63% in favour or that believe that we're going to see a moderate or slight increase actually, over the next quarter or so. But interestingly, there is some quite significant differences between the different lanes in this instance. So, we see that on the transatlantic route, we're slightly up against last quarter. When we look at the Trans-Pacific, we're still expecting increase in rates, but it's less intense than the last quarter. And then on Asia to Europe, there's the biggest change here, because we're now looking at a slight decline in rates, whereas in last quarter's survey, actually the expectation was for an increase, and perhaps that just relates to expectations around volumes, but that's quite a big turnaround quarter on quarter to expectations, and suggests the sentiment on the Asia to Europe lane, largely I suppose based on European performance is certainly declining. So that's the overall picture. So thanks everyone for participating in the poll. I will now share the results with you, and you can see the overall picture as well. Generally looks to be slightly favouring a slight increase, but Nathan, what's your take on the poll?
Yeah, I think that makes sense really. If we look at the demand side, we're seeing evidence of a general improved demand. We're going to start 2025 in a much better situation than we started 2024. So we're going to see increased demand pressure, and I think we can probably, especially with interest rates falling, with inflation now low and allowing some level of consumer demand growth, we can see that happening. We might still, there is still the question of what's happening with production, and that isn't likely to add any significant pressure at the start of the year, but generally it's a kinder environment. We've also recognized the fact that the industry has adjusted well to the disruption in the market, and we're not, even though we have those longer journey times and higher disruption, actually the routes have adjusted and it's not causing that big supply side pressure. So I think quite stable, and I would say the evidence could suggest some increases based on increased demand pressure. But it remains quite unclear on the production side, I would say.
Yeah, interesting. Okay, so let's see then how that also tallies with our actual prediction as well. So if we move on to our next slide, you'll see TI's outlook grid. And so what is this? How should we interpret it? Well, this is basically TI's view as or on rate development for next year ahead. So you see the lines at the bottom there are showing you overall development of shipping rates, and then you see all of the different factors that TI considers when we're looking at our expectations for rates, a split between really supply and demand side questions there really. And if you're wondering how to interpret those lines, the key thing is that what we're doing is showing the effect on rates. So we're not saying, that metric is increasing or decreasing. It's actually, taking it one logical step further is that, well, what is the impact of that on rates? So that's how you should read the chart really. As you can see, if we think back to our sentiment tracker just now and your poll results, there's that sort of slight majority for a slight uptick, and that's very much what our sort of freight expectations are from the model as well, that we should see a slight increase, but that it's not a very significant increase, and that we're expecting that sort of level out next year as well into the second half of the year, as you can see. So that's our overall expectation, but obviously that's driven by the key supply and demand side factors. So I'll invite Nathan now to just give a few highlights on the demand side picture for 2025 as well.
Yeah, so similar to what I mentioned there, we've got an improved situation. So falling interest rates definitely should facilitate and improve trade finance. We're seeing trade restructuring, which is still, even though it's shifting volumes onto new lanes and adding pressure to new places. Production's been quite weak this year, but we do expect it to start adding some pressure and improving. Inventory levels, we've seen evidence that they're quite low as we're heading into the new year. So even though the demand it's still growing and it's not in a very strong place yet, we should see some improved pressure from there. So yeah, generally we do expect increased demand side pressure across the board, but a rather gentle increase in different areas as we head into the start of 2025, up from a good position, a good starting position.
Yeah, thanks, Nathan. I think just on the sort of trade question as well. Obviously, if we do see lots of tariffs, the expectation would be that would have a suppressing effect on volumes, but it also causes quite a lot of disruption to existing lanes and routes and so on, and that kind of disruption also can lead to price increases as well. So it's not necessarily a straightforward connection between those tariffs and lowering volumes and actually an immediate reduction in rates as well. So that's interesting to bear in mind. But thanks for that, Nathan. So if we look at then the supply side, Janelle, what would you say are the key supply side issues that you think will shape rates in 2025?
So shipping lines are investing in new capacity to protect their market positions, and those who gambled on large new capacity in the recent years may benefit as the demand could absorb it. And in future, the higher scrappage levels could stabilize the market. But generally, demand during the season doesn't quite justify the higher rates, and it's going to be interesting to see if higher rates actually stick. Talking about labor shortages, the US port strike has ended, but the impacts are not over. The week of disruption usually leads to at least a month of delays at ports, with those delays increasing as we move inland. And the workers are at risk of striking again in Q4 2025. Generally, due to supply side factors, a sharp market correction in freight rates is unlikely as we enter the new year.
Okay, thanks, Janan. All right, so that draws us to a close on the ocean freight part of the study. Just one quick question that came through the Q&A during that, just to address quickly on the volumes, is that those volume indexes, they measure basically port throughput, so they're not on certain lanes. It's you know, a measure of ports and their volumes in each region. So that's what that relates to. So I think that means that, you know, it can be both import and export volumes for consideration in that particular index. Okay, so we will now move on to the air freight part of the session today. And you know, here we're looking at the global air freight rate index, and you can see overall development there. So Nathan, could you just talk us through this one, please?
Yeah, sure. So generally, the air freight market remains in an unusual place. So we've got some strong demand growth, but it's from different places of the market, and it's disguised by variations of stories in different locations. But generally, what we can see is that we have Chinese retailers that have changed the dynamic of the market this year, and they've added a lot of pressure. And we're also seeing various uncertainties in other supply chains. And what the effect has been a gentle increase, really. So reduced volatility, but a steady increase in the global air freight rates. So if you look at what does the data tell us? Well, the rates of, as I mentioned, have been less volatile. Instead, we've seen a gradual increase, and that's averaged at that's actually worked out a 4.6% year-on-year increase for head haul rates, and it's but it's a 3.2% fall in backhaul rates. If we look at more recent movements, we've seen a more recent increase in the size of head haul rates increase, so that's increased to 8.8% quarter on quarter, and while backhaul rates increased by a more modest 2.7%. If you look at the wider market story, so as I mentioned, it's an array of contrasting pressures. So considering global production, generally PMIs remain low or stable or increasing only slightly. But one thing to mention here, and we'll go into the demand section, is we have seen some increase on IT and tech, which has been one industry that's performed quite well and has provided some general steady increase throughout the year, as we've seen investment in IT infrastructure. And of course, I've mentioned the situation with Chinese online retailers such as Shein and Temu, which are using significant volumes of air freight. So even though consumer demand has been quite low, that's provided a constant and steady demand level throughout the year that's created this stable, steady increase in rates throughout 2024.
Yeah, thanks, Nathan. And just on those key points of demand, particularly things like the direct shipping, sort of Asian e-commerce players, TI has actually published some really interesting research on the actual volumes and the impact of those models on the air freight market. So, you know, I encourage you to check that out on the TI website if you're interested in that area, because there's some really good data on that to show the exact effects there, and also talks about sort of operational models and access to those kind of volumes, that kind of thing. It's quite interesting. And Nathan, just one slightly boring question, but I had quite a lot of questions over the last few sessions like this on just how TI considers the head haul and backhaul routes and what we kind of put into those buckets. So could you just give a bit of an explanation of that for me, or for the listeners?
Quite simple, really. For international lanes, it can be a bit more complicated if we're looking at something like road freight. But what we tend to see is a head haul rate that consistently have the higher prices, and this is driven by where the demand is centered on the lane. So if we go through the major lanes, if we're thinking about the Trans-Pacific lane, we tend to see goods moving from Asia Pacific region over to the US West Coast. So that's going to be the head haul, that's going to be the higher rate. On the back haul, there's lower volumes, there's more free capacity, and that's going to be a lower price. So that's going to be the back haul. So that would be the US West Coast over to the Asia Pacific. Again, if we look at the other major lanes, so we've got the transatlantic lane. This tends to be a bit closer, but generally we see European volumes heading towards the US, so demanding that direction. That's the higher rate, that's the head haul. The back haul is going to be the opposite direction. And then finally we think about Far East Asia Pacific over to Europe. We see that the volumes are going towards the consumers in Europe. That's going to be the head haul. That's where we have reduce less spare capacity, higher rates. On the back haul, it's going to be from Europe back to Asia Pacific, and that's where we have more spare capacity, we have lower rates, and that's the back haul price.
Yeah, thanks very much, Nathan. That's great. I'm sure that'll answer a few of the questions people had. All right, so let's move on to volumes as our sort of measure overall demand. So again, Nathan's going to talk us through this one as well.
Yeah, thank you, Michael. So TI's air freight volume index. So first of all, just to recognize what Michael mentioned on the ocean freight index. So this is it's a calculation using the combined volumes of the largest ports in the region. We do actually have this available to see split out by airports and seaports for ocean freight on GSCI if you are a GSCI subscriber. So we are always adding more airports and ports there. But generally, it's a story of recovery in the previous 2 years. So global recovery in volumes, a steady global recovery. In September 2024, the global index sat up 5.7 points versus September 2023 and 5.9 points versus September 22. So volumes have been up year on year consistently throughout the first 9 months of 2024. And we saw an average year on year growth in each month of 8.4%. So really strong levels of volumes versus the previous year throughout the year. It appears that demand pressure is growing actually and adding more pressure to the rates, and it's now adding more pressure than any other time over the previous 2.5 years. If we look at the wider market story, we aren't seeing the type of predictable cyclical demand we would see that's causing this type of rate growth. It's more of a general recovery, and we're seeing it in different areas. So maybe usually we'd see a consistent predictable growth in consumer electronics and durables. Actually, what we're seeing right now is that we have various levels of uncertainty in different logistics markets. Janan mentioned the ocean strikes in North America and the US in the ocean ports. So that increased their levels of uncertainty, encouraged some shippers to use air freight. So that added some pressure. We're also seeing the Chinese online retailers. So that's just added new demand to the market. So it's not reflective of growing existing demand, it's new demand in the market. But then if we look at other figures, we see some strong growth in consumer demand in North America. We are seeing it in definitely some areas of strong growth in economies in the Asia Pacific region as well. Some of the, I'd say, smaller economies, but now are reaching a very respectable size. But production remains quite low and across the world, so not really adding much pressure. So yeah, not the predictable cyclical increase in demand as we head into the new year, but we are seeing it from various bases, and we also head in a more positive situation. The general consumer situation is improved in 2025, so we should see more demand pressure as well.
Thanks, Nathan. Okay, and on the supply side, we'll look at capacity in air freight, and Janan's going to talk us through this one.
So there's ample growth in both CTKs or cargo demand and ACTKs, which measure available cargo ton kilometers. According to IATA, CTKs jumped by 9.8% compared to October last year, and international operations saw an even bigger rise, up 10.3%, sorry, marking an impressive 15 months consecutive growth. Capacity, on the other hand, or ACTKs, grew by 5.9%, and for international operations, that figure was 7.2%. This growth is being fueled by international belly capacity mainly, which has expanded by 8.5%. The trend in belly freight is interesting. Traditionally, it's oversupplied. It's made a strong comeback after the last 2 years, reaching record highs in Q3. And this growth is being driven by passenger aircraft capacity, not dedicated freighter aircraft. It's been growing faster than demand, and there are signs that this trend is slowing.
Very, very interesting. Yes. Perhaps we come on to the expectations then for next year as well. But also jet fuel, an important factor, of course, and very dramatic chart, this one. So would you take us through the latest on that, Janan?
So the trend we are observing is similar to bunker fuel prices. Across all regions, jet fuel prices hit a 3-year low in September. Fast forward to November, and we're seeing a slight bump in global bunker fuel prices, up by just 0.2% compared to October. But looking at the bigger picture, since the start of this year, the prices have dramatically plunged by 16.5%. That's after a surge earlier this year due to geopolitical tensions. On a quarterly basis, prices are down 4.4%, and compared to the same quarter last year, the drop is even steeper, declining by 21.2%.
Yeah, interesting. Okay, and again, we'll come on to the outlook for that just a moment. But before we do, we have our sentiment index again here, but this time obviously for air freight. So I will just open up the question now on the air freight rates to ask you what you think will happen in the next quarter with air freight rates. And while you're answering that, I'll just talk you through what our survey shows. So less changes really, I think, in the air freight sentiment index this time around, but basically, respondents still expect overall rates to increase slightly, and it's actually 66.5% of respondents were of that opinion that there'd be an increase. But similarly to what we saw in Ocean, actually Asia to Europe, there is a bit of a change. So just a slight increase predicted there, whereas last quarter there was a stronger increase. So not quite as dramatic as what we saw on Ocean for the turnaround, but a bit of a downgrade there. For Asia to North America, we're expecting just a slight increase, which is actually down again from last time, which was predicting a more moderate, so slightly stronger increase last quarter. And then finally, transatlantic, Europe to US, we had a slight increase last time. Now we're on a sort of flat expectation really this time round. So similar overall picture, but as general it's not like downtick really there. So I will just share then the poll results with you. I can see they've been flooding in, so I'll end the poll there and share the results. So yes, again, largely everyone seems to think they're stable to a slight increase, basically, which sort of mirrors what our expectations were in this sentiment survey as well. Any sort of quick take on that, Nathan?
Yeah, I think that makes sense. It's what we're looking. We're seeing an improving demand and recovering demand environment. We're seeing steady demand in the market. If we consider capacity, as Janan mentioned, we're seeing that the spare capacity is falling slowly over time. So everything is pointing towards slight increases, but we're moving away from a very volatile environment of potential for strikes to shift demand. So I think we weren't expecting significant rises, and I think we remain in quite a stable and environment that's going to edge towards slight increases.
Interesting. Yeah. Okay. So thanks everyone for participating in those polls. I'll stop sharing that now. And we'll move on to our outlook grid. So this all works very much in the same way that we saw for the ocean freight outlook. So you should interpret it in basically the same way. And actually the sort of outlook is broadly similar, really, that we're expecting a general slight uptick in rates for the next couple of quarters, and then sort of more consistent market for the rest of the year, really. But maybe we can start with supply side issues this time. So Janan, do you want to just highlight some key points on the supply side for next year?
For fuel particularly, looking ahead, things could get more interesting. After OPEC's demand forecast cuts, oil and jet fuel are likely to keep falling, which could continue having a downwards pressure on air freight rates. The wild card remains the escalating war in Ukraine, which could reignite geopolitical tensions, sending regional fuel prices climbing again. The big question, though, is whether these price increases would make an impact globally or only cause a regional ripple. So on one hand, we have falling fuel prices, which could ease pressure on freight costs. On the other, we've got geopolitical risks that could flip the script. Capacity overall has been growing faster than demand, and there are signs that this trend is slowing. We are not likely heading back to the days of oversupply on some routes, and the market will find balance on the medium to long term.
Okay. Nathan, key demand side issues for 2025 for air freight?
Yes, so I would say that where inventory levels is one that we see is one of the few that could provide stronger a more immediate increase in demand side pressure. We see inventories quite low in multiple regions, and this could, especially in the air freight, being very susceptible to this. If there are shippers that feel like they need large volumes of inventory and large stock, and they need it very soon, this could provide some large upward pressure at the start of the year. But generally, we're seeing very steady increases in demand that might improve. Most notably, if we're looking at actually is the B2B side, and might be affected by tech investments as we see interest rates fall. This could definitely have some upward pressure. And then we also see the effect of trade restructuring and improved trade finance as a result. So this could be some causes of some stronger growth in the market on the demand side, even whilst generally it seems rather steady as we head into the start of 2025.
Yeah, I think one other thing I might throw into the mix slightly there is possibility of own regulation on some of these direct shipping e-commerce providers. That possibly might constrain those kind of volumes a little bit through 2025 as well. So that's really strong growth that we've seen. That may not be completely sustainable, even if probably still going to be a big factor. So something else just for us all to consider there. All right, but that brings us on to the end of the presentation today. So thank you very much, for joining us for the session. We'll now move on to our Q&A session. I see we've got a few questions, coming through already. So I have our first one here. Do we believe overall capacity will increase from China to Europe as the US is going to increase import rights on China tariffs, I suppose, that sort of thing meant there. Is this going to give positive cost evaluation from China to the EU? So I think the question there about basically transfer of capacity if tariff barriers get put up on the Trans-Pacific trade, particularly. Jinan, do you have a view on that?
It's an interesting picture on that front because the EU is also going to be imposing tariffs on Chinese goods, both electronic vehicles and online shopping. So it's going to affect both the air and ocean market, really. Generally, the trend has been that goods are being imported to Mexico instead as a way to circumvent the trade tariffs. And therefore, goods are coming from China to Mexico and then from Mexico to the US. So the effect is not yet clear, but it's likely that Chinese goods will remain strong in Asia and perhaps more strong in Europe than American demand.
Yeah, so it's an interesting picture, really. I mean, yes, if there's talk of tariffs going up, even within North America, again. So, partly to deal with that, partly just because of the sort of protectionist policies. But yeah, so the shift in volumes might not actually be that considerable, if we also have similar tariffs from Europe, but they need to be less pronounced. But then again, if we're moving to an environment, the US is imposing very strong tariffs on lots of different products and commodities, then we may see reciprocal tariffs forming in other places, and that can get very unpredictable in terms of the effects on trade volumes on different routes or all around the world, really. So it is hard to predict really the outcome, that kind of thing. All right. And there's another question, maybe this one for you, Nathan. You know, about demand really in 2025, but can we expect producer and consumer demand to add pressure to rates in 2025? We talked about that a bit, but what's the picture for next year, do you think?
Yeah, I think the easier one to answer is what's going to happen with consumers. I think we are seeing an improvement. I think it's a steady improvement. I think inflation is definitely way down in the areas where it was pulling down. So it's no longer pulling volumes down. And I think we are definitely going to be heading into a period of time where volumes can improve. I think there's still some questions about the true underlying health of the US economy, but definitely from Europe, we should start seeing improvements. The rate at how much this will improve is really going to depend on how quickly consumers are able to kind of pull their spending power back. I would say that at the moment it's looking like this is going to be quite slow. So I think it's just going to be some steady increases through the year because wage rises are still just only increasing slowly. In terms of the production side, yeah, that's quite unpredictable. We can really see that production is low and really production is going to need some type of trigger. So interest rates are going to help. They're going to help for investments. I think it's probably easier in tech, as we mentioned, especially for the air freight market. But for other industries, it's going to take some time. So first of all, there needs to be that consumer demand to encourage the actual levels of investment. And I think in the US is doing fine there. We should be quite strong. Asia Pacific region doing really well across the board in both consumer and production, really, especially some of the smaller markets. You might look at maybe a Malaysia or an Indonesia, both in terms of the domestic demand and then the production and the exports. Europe remains a bit unclear. You've got Germany, which is seeing reduced output, reduced exports, and is still really uncompetitive in the global market. So generally, consumer demand should increase steadily. Production remains strong in the US and probably is going to be relatively strong, especially in some of the smaller, well, relatively smaller than China, APAC markets. Europe is going to take some time, especially if we consider Germany, but we are seeing some strong results from Spain and Poland.
Yeah. And it still feels that we're waiting for that recovery, really, and maybe it's never going to come in that dramatic way, and just be as slow and steady as you say. Okay, and another sort of question here, really on looking more at capacity again, really, but this time in ocean freight. So, well, perhaps for you, Janan. But with new vessel deliveries and low scrappage levels, do you think the global shipping industry is at risk at returning to oversupply issues that we saw prior to 2020? What do you think?
So oversupply's risk is growing due to the sustained new vessel deliveries and minimal scrappage, which could overwhelm the market, especially if demand weakens. However, the high utilization rates we're observing and the impact of rerouting vessels are currently absorbing some of this capacity. As long as these factors persist, this may return to the overcapacity issues seen before 2022. The balance remains questionable and fragile, but perhaps high scrappage by the carriers will offset this problem on the long term.
Yes, okay. Thanks, Janan. Yes. And we have another question here, which is looking at, well, I guess building what we've just said there. So, EU main economies difficulties and the potential for duties, equals less volumes from Asia to Europe at what kind of level? Well, yeah, I mean, you may have noticed that we didn't give a precise figure in the previous answers on that particular one because it's very difficult to set those kind of, expectations. But yeah, I think maybe we flip the question around a little bit and sort of say, well, actually, we do expect, even though there are those economic difficulties, the European demand levels to increase, as Nathan was just saying, over the course of next year. But it's more really about how much they would otherwise have increased and the sort of the net effect of those sort of negative factors. So, we're expecting that it just means that volumes would be maybe lower than they otherwise might have been, but we're still expecting increases. So I appreciate that probably still doesn't fully answer your question, but if you really need to look at the sort of demand forecasts, for those particular lanes in more detail, then I encourage you to check out our sort of air and ocean freight forwarding demand forecasts on GSCI. And if you want to talk about those, I'd be very happy to go into a bit more detail on what the picture is on those figures to show demand for next year, but also 5 years out as well, and our expectations overall. Okay, well, I think that brings us to the end of the session. So thanks very much for all of you for joining us and your questions this morning. If you have any additional questions, or you want to carry on the conversation, or you need more detail on any of those things, please do feel free to get in touch with us using the details on the screen now. I'll always be very happy to hear from you and to discuss any further questions you may have. But otherwise, thanks very much for joining us, and thank you very much for Janan and Nathan for sharing your views and insights with us today, and for the good work on the reports. Just a reminder that you'll be sent a recording and copies of, or links to download copies of the reports after the session as well. All right, and thanks for joining us today, and we'll see you next time. Bye-bye.